I ain't gonna lie, in order for the market to pull back 50%, in order for this to happen, it has to be something worse than all of these things here to happen. Maybe like World War III, you know. Look, they even say it here on Investopedia. A correction can be positive, adjusting overvalued asset prices and providing buying opportunities. Listen, a correction provides buying opportunities. Black people never run from a good sale. Trade tension. The trade tension is going on now with, you know, with the tariffs and stuff. So, you know, more trade tension going on. Could we see a pullback? Disciplined Diamond Hands back with another video, man. I'm not a financial advisor, but I'm going to discuss the economy effect on the stock market. We're going to discuss what is a correction, a pullback, a bear market. We're going to go over we're going to go over why are corrections good. Corrections are good because, listen, broke people never miss a sale, you know, black people never miss a sale. If it's something that was worth $50 and it's trading at $10 or it's trading at $20, we're gonna buy it low and we're gonna ride it back up. Why? Because it's undervalued. Corrections allow you to get overpriced assets at a lower price. Some of the prices might be undervalued. That's even better. Let's keep going. And what are good areas to buy? But first thing first, we're going to go over the economy. First thing, I think the biggest headline that they're missing on this page is October 1st is the deadline for the government shutdown. But I saw these numbers this morning come through. I was like, okay, the market, the GDP grew. Market might be a little green, you feel me? But that's not here or there, you know. Your home sales fell in August, so by home prices. I ain't gonna lie, I guess my private equity fund and LEN is growing. My real estate investments are still growing. That's good. But yeah, the economy affects the stock market a lot. How does the economy affect the stock market a lot? Well, because these are the last economical events that happen, and these are the events that cause the stock market to fall like between 5% or more, you know? We got the dot-com crash caused the market to fall, global financial crash, oil uncertainty, trade tension, COVID, retarded inflation, you know, because of the, you know what I'm saying? Then we got the president inauguration that caused this decline. And first thing first, I want to break this down. This is the 200 EMA, and this is the relative strength index. These are going to be the two indicators I'm using today. And I got videos on my channel with both of these indicators, break it down like how to use them. But first thing first, we're going to go to indicators, type in RSI, relative strength index, click it here. We're going to type in moving average exponential, click it here. We're going to go to our settings, and we're going to make sure that 200 EMA 05, all of that. And we're going to make sure our RSI is 14, close SMA 14. The goal is to make sure you get value out of this and you learn something. And yeah, let's get straight into it. Let's do it. All right, so president inauguration that happened right here. Why shouldn't you panic? Because first thing first, if you use the 200 EMA, and if you're an investor that buy at demand zone and you understand technical levels, you will see, oh, there's no issue with price coming down here. Why? Okay, yes, it is a correction. A correction is a decline of 10% or greater in the price of a security asset or financial market. We can go over some definitions. A pullback is a temporary reversal in upward price trend of a stock or other investment. So a pullback is basically anytime it show up red. If it's a red candle, it's a pullback, just depending on the time frame. Is it a 1 minute pullback? Is it a three month pullback and it's just going sideways and pulling back slow? You feel me? Yeah. But yeah, Investopedia, read it on your own. We're going to the next definition. Correction. What is a correction? Correction is a decline of 10% or greater of a price security asset or financial market. Okay, read the rest on your own. Look, they even say it here on Investopedia. A correction can be positive, adjusting overvalued asset prices and providing buying opportunities. Listen, a correction provides buying opportunities. Black people never run from a good sale. This was a good sale right here. Why was this a good sale? Well, first off, it's a demand area because this was a resistance right here, and it's the 200 EMA, and it was oversold or undervalued because it was at a 30 RSI, it was at a 200 EMA, and it was at a past resistance turn to support. And oh yeah, let's measure it. Okay, let's get the measuring. Okay, look, this pullback was just 22%. Let's say 22%. A bear market occurs when prices in the market decline by 20% or more, often accompanied by negative investor sentiment and a weakening economy. So it actually was technically a bear market, you know what I'm saying? It was a bear market. And why am I choosing the SPX to go over this chart? Because the SPX holds the top 500 public companies in the U.S. stock market. What are the top 500 public companies in the U.S. stock market? First is Nvidia, Microsoft, Apple, Google, Amazon, Facebook, Tesla, Chase, Walmart, Eli Lilly, Visa. All of these names right here, these are the top 500 public companies in the U.S. stock market. And these companies, the SPY and the SPX index is the safest thing to invest in. Why? Because 300 companies can be doing bad, 200 companies could be doing good, and your investment can be growing. For the bulk of these companies to be doing bad, that means the U.S. economy has to be doing bad. And as we can tell from the 1600s, the U.S. economy has been growing, and we can tell that as well by the asset prices, by every asset price. Look, started at what, $2.73, and now we all the way up here to 6,700. But yeah, these are great companies to invest in, but just invest in the SPY ETF to diversify yourself. And I feel like 20% of your account should be in SPY, or 10 to 20%. As you get better at trading, you can lessen the percentage of how much you put in safer investments. When you're first starting out investing, or if you're a beginner now, I ain't gonna lie, put 90% of your money in safe investments. So that means put 20% in VOO or SPY ETF. Then with the other, 70%, with 70%, put that money in companies that are in SPY holdings, that are oversold on the RSI, that are at demand areas. So that means any of these companies on this list that are under 30 RSI at demand areas, those are good stocks to start looking at. But also just make sure it's not under legal scrutiny like J&G. Don't make sure they not getting sued for $30 million due to their baby oil or something like that, you know? But yeah, that's why we're going over the SPY, because it's one of the best ETFs and indexes to cover. But check this out, just a little 22% pullback and it bounced up. Let's check this out. 26% pullback due to the inflation after COVID. But that's cool because look, after that, look, the stock market went back up because the U.S. economy will always recover due to capitalism. The only way the U.S. economy will fail is if capitalism fails, you feel me? But look, 90% return after that 26% pullback. So it's like every time someone tells you like, oh man, the stock market pulling back, it's in a correction, man, just tell them black people never miss a sale, bruh. And to leave racism out of it, because we gotta leave racism out of it, and we gotta leave politics out of it. Just say broke people never run from a good sale. Because honestly, I'm broke, and I don't run from good sales. And every time I go to a store, my budget is like $25 or less because I'm broke, you feel me? Let's check this out. Look, it fell back 35%. This was a bear market. It's all good though, because guess what? That's a good sale for us. It pulled back somewhere around there. Look, that's a 214% return. Let's keep going. Trade tension. The trade tension is going on now with the tariffs and stuff. So, more trade tension going on. Could we see a pullback? we could see one. Who knows? Check this out, 18%. That ain't, you know what I'm saying? Okay, so I guess my proof was to show you that every correction or pullback is normal. Now what I'll go over is what might happen with this pullback and what are some good buying opportunities, because that's what I did mark up. This video is at 10 minutes right now. I gotta keep it under 15. I'm under extreme pressure. Okay, why correction's good? I already said that. Broke people never run from a good sale. If something is worth $6,700 and it go on sale for $3,300, buy it and sell it when it go back to $6,700. Don't even sell it when it go back to $6,700, because the market always make new all-time highs. So if it was last at $6,700, that means it might go up to $10,000 this time. You feel me? But yeah, what might the market go this time? And let's check out what might happen. So right now the market is in a pullback. Let's see what is a 10%. What would be correction territory around this area? This is correction territory for the SPX index. So I ain't gonna lie, I kind of like this area because, as we can tell, like last year, like right here, this was a resistance area. Resistance, it broke out. So I mean, it could come back to this area, hold, and then it could keep bouncing. So that's one potential play. I mean, honestly, it could just pull back and keep going tomorrow. But this is in case this is a buying. What are good buying areas? This is a good area if it fall back 10%, because it could potentially bounce here, because the last couple times you saw what it did. Let's do it if it falls 20%. 20% is here. Let's do a line for 20%. Okay, this is 20%. All right, so let's erase this because it's starting to look a little too crazy. So now we got 20% here. And okay, this 20% area looks good. A little resistance, you know, resistance, boom, boom, a little support, boom, boom, boom. Okay, boom, boom, boom. That's another good buying area. Then we also have, look, the 200 EMA is around 25% pullback in a good area. I mean, I ain't gonna lie, in order for the market to pull back 50%, I feel like honestly, like, just in order for this to happen, it has to be something worse than all of these things here to happen. Maybe like World War III, you know, it's a lot of tension rising, you know. Maybe we won't have no trading partners. We won't have no trading partners. Imagine that. That would be crazy. But it might be a financial crisis, or it might just keep going. At the end of the day, this is what you got to do. You just got to zoom out and look at how bullish the market been since the 1600s. And you just got to know that that's how bullish it's going to keep going, because capitalism, it won't fail in our lifespan, you know. I was editing the video, I forgot, man. I gotta tell y'all this little setup. But hey, listen, the news will try to fearmonger you out of your position every day. They will come out with bad news every day to try to make you sell your stock. As soon as you sell it, they gonna buy it. And then you're gonna be on the sideline watching it, and it's gonna be going up 50%. So don't let the news fearmonger you out of your indexes and your ETFs and your good investments, you feel me?